Snipers, you have to see what's happening to the Bitcoin price this Thursday as we have a daily candle high of 51,375. But more importantly, Bitcoin is back above the $49,700 resistance level. This has been the most important level that the bulls have had to conquer here in the short term. For us to assume that this 200-day moving average can potentially act as a support level for Bitcoin to get back above its 20-week moving average, which is currently sitting right at $53,000 on the dot. So the important thing for Bitcoin right now is to start getting itself above 53,000, where we have that 20-week moving average, to come and test its 100-day and 50-day moving average, which is showing confluence at this market structural resistance level, which is a big puzzle piece because that could be a target right now, right around that $55,000 level for Bitcoin to come and test that level, and that gets it above its 20-week moving average. We know right now that 49,700 is going to be the major support level, and we are back inside of the range with a resistance of 58,353. We don't want to see candles get back below 49,700 if we want to assume continued upside here. Even if we start to see volume on a 3-hour chart, that's really what I'm looking for. You can see we're actually seeing descending buy volume, so we've yet to really see the buy volume from institutions. I don't really trust the 4-hour chart much, as you guys know that have been tuned into the Snipers channel, because that's a very popular time frame, and we know institutions love using some of these less popular time frames like the 6-hour and 3-hour. So if we can start seeing that volume, that's the final confirmation that this could be a potential bottom. But for now, we have to just realize 49,700 is the major support. Being above that, we have the opportunity right now to potentially test 55,000, where we have confluence with the 100-day and 50-day moving average. That puts us back above 53,000 at the 20-week moving average, and then 58,353 is going to be the most important resistance right now to conquer. If we start seeing price action to that level, we'll start addressing that. We took long trades on our Discord below 50,000 US dollars for Bitcoin, and those were low risk swing trades. So I've always mentioned this 200-day moving average is a potential area that buyers are going to be coming in to dollar cost average their positions, and the Ethereum to Bitcoin chart is coming below its monthly open right now, and it's also below its weekly open. So we have to start looking at the potential scenario that Ethereum could be seeing some weakness in the short term, but nothing significant, because there's still room here to test the 74,000 Satoshi level where we have market structural support, and that would be totally garden variety market behavior. What I really like though is that the chart that factors in altcoins outside of Ethereum is starting to move up above all of their daily moving averages. And we've talked about the Ethereum to Bitcoin chart being a leading indicator for all of the other altcoins. And this is exactly why we say that. With this move so far, we've yet to really see a confirmation that Bitcoin dominance wants to see strength or even weakness, but we know we're at a major support where we could potentially start seeing strength here for Bitcoin dominance. So that could address why the Ethereum to Bitcoin chart is starting to move down. Now, the total market cap, notice how it's testing its 100-day moving average, unlike Bitcoin, which has yet to get to its 100-day moving average. But when we look at the total market cap and the weekly chart, notice how we are seeing price action now above this 20-week moving average. And so could we assume that the total market could be a leading indicator for Bitcoin right now? That's certainly on the table if we stay above this $2.374 trillion level. We could certainly assume that Bitcoin can get above its 20-week moving average at 53,000 and continue to see upside, potentially get back into price discovery to see new all-time highs. We want to address the S&P 500 here, showing a lot of strength at the 20-week moving average now, looking like it wants to continue into new all-time highs. I think I saw some headlines saying that it did move into all-time highs, just not on my E-mini futures contract chart. A lot of that has to do with the DXY calming down here, potentially looking like it wants to top out above 95.885. If we break below this level, that would be an extremely bullish puzzle piece. So we want to monitor the DXY over the next few days. And then we also want to monitor the gold to Bitcoin chart. As we know, we are above the 20-week moving average right now. So we've yet to see a decisive break. If we get below the 20-week moving average, another confirmation that Bitcoin has a lot more fuel left. But so far, we've rejected the 50-week moving average. We're seeing calmness between the 20-week and 50-week moving average. And as I've mentioned before, if we look at the correlation between the gold to Bitcoin chart consolidating between its 20-week and 50-week moving average, it's similar to how Bitcoin is also sandwiched between its 50-week and 20-week moving average. It's just the opposite. That's why those are inverse correlations. I just wanted to throw this on the table for some of you that like to watch more correlations. Oil right now is correlating with the total market cap, both testing their 100-day moving average. And so that's certainly another puzzle piece on the table there. Getting above that 20 week at 53,000 is a macro puzzle piece that needs to be put in place if we want to see continued price discovery and new all-time highs into the early start of 2022. So that's why being above 49,700 was the first checkpoint that we've been watching here. And we finally got that confirmation. We took long trades in our Discord for those when we were below 50,000. And we also took a lot of trades on altcoins with this dip. Does that mean that we're not going to see lower prices? Well, 49,700 is going to be the major support to give us that answer. If we stay above that level, we can start assuming 58,353 because that currently is the resistance in the range that we're in. Of course, we don't have a full daily candle closing above 49,700 just yet. So the downside scenario is still always going to be on the table. But we're seeing what we want. The bulls are making their mark. And with that, thank you all for tuning in to the Snipers channel today. I appreciate each and every one of you tuned into our YouTube channel. Remember to smash the like button for the YouTube algorithm so that we can hit 100 likes on this video. We didn't hit it on our last video. It's a small goal. We have thousands of viewers. And happy holidays to all of you celebrating. Until next time, Snipers out.